Right, so when we talk about innovation-driven value chains, we are not exactly introducing a concept that's particularly new to the industry. Innovation in the value chain has existed long since the conception of banking. However, the context of how it's being pursued is changing very rapidly as we move forward into 2017. The demise of industry is really speaking about the convergence of value chains in industry. So to put things very simply, banks can no longer just afford to be banks. In the same way how they are being disintermediated by retailers and telcos, for example. So we see players like Alibaba or Verizon all starting to play in the financial services space. So which begs the question, how should banks then transform themselves? Can they eat another person's lunch? Can they play into the space of content the same way retailers have traditionally played in content? Or can they play in the space of technology empowerment the same way telcos have played in technological empowerment? So that is really the basis of what we mean by innovation in a value chain. It's not so much layering traditional financial products with newfangled window dressing like big data, or customer centricity. Not to put those things down. Those things are relevant, just less so today. So what we are positing is that the core value of what's being proposed by banks can no longer afford to be just loans or deposits alone. It has to be something new, it has to be something very much more contextualized for the lifestyle of the consumer. A lot of what the industry sees as innovation up to this point has really been about augmenting existing products. You look at the key agendas of the past 2 to 3 years, buzzwords like omnichannel, data centricity, customer centricity. All of these things apply very new, back then new, technology concepts or technology IPs onto the existing business, layering it upon loans, deposits, advisory, what really defined the banking suite of propositions over the past 50 years. And that is the key thing. It is existing products, but existing products, no matter how augmented they are, they start to decline in relevance, especially to the consumers of today, who really demand something more. Which is exactly why fintechs have been so destructive, because they don't really offer a broad suite of generalized solutions, so they're not really a one-stop shop. But they offer single or several, but few solutions that are highly contextualized. They're very niche, but they're very, very good at what they do. So to your earlier question about how successful banks are doing this, they're embarking on innovation-driven value chains. At this point, there's certainly room for improvement. There needs to be a change in paradigm of where innovation is actually conceived in the organization. It shouldn't be product up. Your business case has to be made from a value standpoint. Where should the bank play in the customer journey, so to speak?